help out slow processing lines. Agriculture Secretary Tom Vilsack says the USDA is working on a proposal for a waiver system for hog plants forced by a federal court to slow down processing lines. Vilsack did not specify what those waivers would do, but earlier this year a federal judge ruled against a Trump administration rule allowing plants to run slaughter lines without speed limits. The USDA did not appeal that decision. The agency is now looking at ways to allow more adequate processing speeds without endangering worker health and safety. Vilsack told a congressional hearing USDA is working with the pork industry and workers' representatives on the issue. Policymakers and producers were once again on Capitol Hill talking about competition in the livestock sector. A few packers control 80% of the market, and senators like Iowa's Chuck Grassley thinks those companies should have to buy half of its weekly cattle on the open market, which he says would create price transparency. With that reform as part of livestock mandatory reporting extensions, however, the National Cattlemen's Association oppose it, causing it a one-size-fits-all policy that would have unintended consequences. Meanwhile, at the hearings, Ag Secretary Tom Vilsack argues for more transparency and processing capacity.
The goal here is obviously to strike a better balance between supply and demand, between processing capacity and competition, with greater transparency so that we can have a stable, dependent, and fair market. At the end of the day, our department is anxious to have fair prices for producers and a fair deal for consumers.
And starting the week off mixed, our market analyst Jamie Kawaki has more.
Today is Columbus Day, so a lot of the fun money is not trading as it is a federal holiday. So it's a little thinner at times, just needs the book squaring too ahead of tomorrow's monthly WASDE report. Maybe a little bit bearish for beans and more neutral on the corn side there. The key will be to longer term with the fund money as well. We are seeing funds pull out of their longs and soybeans. They are still long a tad bit, but they have pulled back again last week. But managed money is adding on their longs and corn and see if that can sustain too based on whatever happens tomorrow with the report. Over the meat complex here this morning, just a real sloppy, sluggish trade. Still think the short-term trend is higher. Look for kills this week to be pretty much steady as we were a year ago, and look for cash to be steady as well. Over to the hogs, 50-60 lower here. Not much going on at all here so far this morning in hogs. Just really not getting much traction at all from even last week when we had kind of a late week sell-off. And even here today, we were sharply lower right off the bat, and we have stabilized a little bit. But the market still looks like it may have a little bit of a short-term bearishness to it.
The Colfax Sheep and Goat Auction on Saturday saw a sale of 260 head of sheep. Feeder lambs fetched the day's average price of $2.55 per pound, while fed lambs averaged $2.30 per pound. There were 160 head of goats at the auction, which saw a high average price ranging from $130 to $420 per head. And that's all I have for the Agribusiness Report today. Thanks for joining me. I'll see you again next time. We have our stories online. Head over to WHO13.com, click News, and then Agribusiness.